Yes, car experts actually share how to get yourself a car loan in today's financial climate. We know about 31.8% of the population polled actually believe that there's no way that they could possibly get themselves a car loan because of high interest rates, high price of vehicles, possibly because they question their very finances. And while some of that's true, prices have never been higher. We've seen prices for new cars, trucks, SUVs, they've gone through at an alarming rate. But we flipped the table, and actually there are some great deals. And we've been hearing about some of the incentives. $18,500 off new Ram 1500s. We've seen interest rates 4.9%, 2.9%. We've seen interest rates, finance rates getting much, much better. And prices are coming down. A lot of these manufacturers have excess inventory and they're finding struggles to actually sell. So this may in fact be the time. If you've been looking for a new car, you're probably wondering, how can I get that new vehicle? Can I actually get approved for that loan? I know my finances are mediocre, but what are the things that I'm going to have to do to maximize my opportunity to get myself a car loan? Because this might be the year that I get myself a new vehicle. Hello, my savory seeds of sunshine. Welcome back this afternoon. Let's drive right in to the conversation of some of the tips that I've learned over the years and some friends and industry peers that have all brought together some of these tips that will help you almost guarantee to get your new car loan. And according to Cox Automotive, we're starting to see the decline in brand new vehicle prices as well as used car prices as well. And this could represent a great opportunity. As a matter of fact, we're seeing the average transaction price for a new vehicle now is about $744 a month, which is down from January of the same year, as well as way down from $795 in December of 2022. And would you actually believe even 15% of the population are still carrying car loans of over $1,000 a month? Now, I'm not here to advocate to get yourself in debt. I'm here to simply support you in how you want to go about it, how you can maximize your efforts and minimize the impact on your financials. So before we dive into the details, first I have to talk about negative equity. And if you're currently in a situation where you're carrying too much negative equity, in other words, the car is worth far less than what you own to the bank on it, I wouldn't necessarily suggest blending that into your next car deal. I would likely suggest probably no good win out of this situation, but the least impact to your finances would actually be buyout with cash or some other means, the excess, the differential, so that you can actually get the free and clear amount of that vehicle. You never want to absorb and blend in your outstanding negative equity into your new car loan. But let's roll into this. And you know, it's pretty easy to check through applications, check online, but it's pretty easy to find your credit score. Modern day lenders don't like to typically lend under a score of 670 in your credit score, but that's conventional banks, that's conventional lenders. There are some high risk lenders which conventionally you will pay a lot more interest charges, so you have to understand that. So your best approach is definitely to do the little things to try to improve your overall credit score. If you do plan to buy a car this year, maybe next year, possibly the year after, definitely start targeting how you can actually improve your credit score. That's one of the critical elements. But if you need something in short term and you're willing to pay the high interest rates, the more deposit you put down, the less impact that high interest rate will have. Remember that. But for some reason, if your score is not that great, and say you can even go down as low as a 575 with some of the riskier lenders. For example, my auto loan has rates from 5.49%. They're simply looking for a FICO score of better than 575. Their loan terms start at $8,000 and you can actually borrow it in anywhere from 24 to 72 months timeframes. Capital One doesn't even necessarily care what your credit score is, and you can take loans of $4,000 and up as well. Terms of 36 to 72 months will apply. So one of the best chances you have of getting your car loan is increasing your down payment or your deposit. The more you can come up with, the better. So if you have time to actually wait this out, I would always suggest waiting out and put money aside, budget money aside to increase your deposit or your down payment. Remember, I've said this before, the old 20-4-10 rule. 20% deposit, down payment would be your best angle. 4 would be the maximum of 4 years, as well as 10 would be don't exceed 10% of your gross monthly income on your car loans. Now that's your best case scenario, and that's I honestly, ideally, all marketed, all created to give you the best fighting chance to get through your car loan, enjoy the car for the next 4 or 5 or 4 years ideally, and move on, not skipping a payment or going into delinquency. So that's your best case scenario to give you the maximum fighting power. But there are other options, but it all helps to fight against your loan to value ratio, which does get you potentially better interest rates on your big car loan, because for every $1,000 you put down, that's an extra $20 off the bottom line for monthly payment. However, I do suggest having as a high yield savings account that does pay back significant dividends. So with a 5% APY, Lending Club's HYSA is one great option you can look at. There's 0 monthly fees, 0 excessive transaction fees. Checking account is available for those flexibilities. No maximum transactions that they're going to charge you with. And other than the $100 to open, there's no minimum balance requirements. So it just gives you an option to pull this package a little money away and bring a little bit, build up that account over a period of time if you are waiting to save. But ultimately, the best thing is just wait it out and put down the maximum available money on a down payment. One key factor is making sure that you have that credit score of 670. If you don't, or if you're on the cusp and you just want to boost it up so it gives you a better fighting chance of actually getting a car loan, want to up your credit score. One great option to up your credit scores, if you can wait a few months, is utilizing revolving debt factors, for example, like credit cards, buying debt, paying it off, buying objects, paying it off, run it up, pay it off, run it up, pay it off, and don't ever go late. But the more you do this, that exercises your credit, and it usually ends up helping your credit score in the long run, thus will ultimately get you a better credit score in the end, and of course potentially better buying power. Not only will it get you in the door to get that loan, but likely you'll get even better interest rates if you have a much better credit score. It's going to help you in the long run, which yields less money per month. And so while your income isn't generally looked at by creditors, it is important to maintain your debt to income ratio, DTI, which is the amount of debt that you carry each month. That can include student loans, car payments, rent, mortgage, and general credit card bills. Those factors are very important because if you exceed 35%, which is more or less the industry average, then they look at way too much debt on your plate and you're likely going to struggle making the payments. Seems like too much of a risk. So trying to keep your ratio down below 35% of your gross monthly income is going to ensure you have a better chance of getting that loan. And while I'm not here to necessarily teach you how to fix your financial mistakes, there are credit consolidation loans that are opportunities to possibly shrink everything up. Maybe you've got some high interest loans that you want to bring it together in one lump sum, and they'll actually look at credit scores as low as 620. Once you've consolidated and you've brought everything together, it seems like a much lower risk, and it likely will become less stress for you as the buyer. Another option is getting a cosigner. Have you ever heard of kids maybe getting their parents, their dad, their mom to cosign for a car loan? Now that does pose risk to the cosigner, the person signing on the dotted line. For example, the parent signing for the child. The parent takes on the risk of those car payments going off the rails. So you got to make sure if you're a co-signer for somebody, you got to make sure you trust them, you have faith that they'll make the payments, and that does help ultimately build credit. Of course, if somebody's maybe a young student, somebody has not had a chance to build up credit, it's a great opportunity to do that. Take a very small car loan or a small credit loan, basically gets them into the game so they can start building credit so that they can go out on their own, buy their next car on their own, maybe their next mortgage or what have you. And so all these little tips help get you over the threshold to qualify for that car loan based on your credit score. Again, in summary, you basically need to have the credit score to even qualify with the banks or the lenders. Once you qualify, then you have to look at some of the other rules. You definitely don't want to exceed your monthly income on some of these factors. You want to keep your loan terms down below 4 years. Ideally, that's going to make sure that you get your car paid off in due time. The longer it hangs around, the more depreciation, the more all of a sudden car repairs start becoming a problem because you lose warranty and you're out into that 4th and 5th year hemisphere. And then you basically end up paying through the nose for both repairs, maintenance, and of course you're still making car payments on this grossly depreciated asset that has very little value at that point. So the more you can shorten up that car loan and keep your payments within a controlled space, the better off you'll be. Remember, there are a significant amount of people currently that are carrying car loans over $1,000 a month. Don't be one of them. The less you can actually pay in a given month, the better. And ultimately, if you don't have enough deposit, If you can't do it in the 4-year time frame, basically what I'd suggest is just save up a little longer, put a little money aside, get one of those high yielding savings accounts to get you moving and to get more money in the side sort of working for you. And those will all be great ideas in terms of getting your next new car loan. And if you really want to understand more about this conversation, how you can actually afford your next car based on your salary, you're going to love that video. Hope to see each and every one in the next one. We'll see you real soon. Bye-bye.